Thinking about buying a home this year? Then this video is for you. Hey there, I am Christina Sparks, realtor with Coldwell Banker, owner, House of Sparks. One question I often get asked when buyers are starting the home buying process is, how do I decide which loan program is best for me? Enter mortgage brokers. Mortgage brokers are lenders who can shop countless, and I mean countless, loan products and usually have access to a variety of financing options to help get you into a mortgage you're comfortable with that also fits your financial needs, including creative loan options or lesser known loan options. In this video, we'll learn about 3 loan programs you may not have considered that might be your ticket to your home ownership goals. First up, 203K loans. Have you ever fallen in love with the potential of a fixer-upper but hesitated because you didn't have the cash for the renovation? I've done it many times, fallen in love with fixer-uppers. A 203K loan, also known as a renovation loan, allows you to combine the home purchase and the renovation budget into one larger loan so that you can literally finance your renovation into your mortgage payment. Win, win. Next up, bank statement loans. This is an excellent option for anyone who is self-employed and doesn't have 2 full years of tax returns. 2 years is typically what's required. This type of loan allows you to qualify for a mortgage using bank statements to prove your income instead of taxes or tax returns. These are considered riskier loans, and they typically carry a higher interest rate. Next up, 80-10-10 loans. This type of loan allows you to avoid PMI with only a 10% cash down payment. Here's a video on PMI. This is considered a piggyback mortgage, where you take out 2 separate loans, the first being a fixed rate conventional loan at 80% of the home's cost. The second is a 10% home equity loan. You're still making a 20% down payment. Instead of using all cash, you're financing 10% with a second mortgage. One thing to note with this one, the 10% home equity loan typically has an adjustable interest rate. What that means is your rate could change at any time, which also means your payment could change at any time. Keep in mind that every loan type has its own criteria and guidelines, as well as risks and benefits. Discuss your options with a trusted lender to determine what may be the best fit for you and your financial goals and homeownership goals. Have questions about the market in your area? Feel free to reach out. I'm happy to help any way that I can. Have a great day.